focus on the cement space. And to help us out, we have Mangesh Bhadang, the Senior Vice President Research at Centrum Broking. Hi, Mangesh. Good morning and good to see you in as always. Mangesh, a couple of days ago, we had asked the CFO of Ambuja Cements about this possible block trade, and it's in fact taken place. And sources indicate that in all probability, it will be the promoter entity that's sold. What's your view? Because some part of the street was a little bit cautious. They converted those warrants at 420. They're looking to sell some stake at more than 600 rupees odd. Give and take everything. Your view on Ambuja Cements from these levels.
Yeah. Good morning, Nigel. And as always, thanks for having me. Any stake sale by promoters at higher levels is always looked at, in fact, it is not looked at very positively by the markets. But given the way things are, we have seen so many deals happening. I think the overall impact on the stock has been limited in most of the times. I think yesterday the announcement was, or the understanding was, the deal will happen at 5% discount to market price, which was a very surprising thing. But I think that as the deals have just gone through, I think it has happened at around 625. So, at least on that pricing front, it is slightly higher than what the earlier estimate was. So if you look at this overall view in terms of how the deal has happened, what we see is that the promoter entity is actually trying to reduce some of the debt burden that they would have, and that would be looked at over a longer term. I think that is a wise thing to do for them. There is definitely this thing that they had taken the preferential warrants at 419 rupees. But if you look at the time and the amount of money that they raised through deal, and that has been utilized by the company, so that money went into the company, and this is from the market they are taking this up. So I don't see too much wrong in it, and in terms of our view, we have a positive view on the stock.
Okay, you have a positive view out there. Mangesh, earlier today we had made this point as well. As per what feedback suggested is that there was fair bit of demand out there, and if it takes place in the block window, then those shorts will have to scramble for cover, and that's why in pre-open if we see the stock is likely to open up, gap up with close to 3% because those shorts are going to get squeezed out. That aside, you're positive on Ambuja Cement. Just a quick question. They have been talking about growing volumes, cost cutting as well. And they also hinted that maybe in the next few years, there could be one listed entity, Adani Cement, with all the companies, part of the same group. What is your view? They've already been talking about synergy benefits. Will this still add something? If yes, could you quantify it?
Most of the synergy benefits in terms of cost reductions or OPEX front are largely in place. They are working out of the same office. I think the merger over longer term would benefit in terms of creating a larger entity. So going to the capital markets or raising debt in future, that becomes easier. Secondly, the dealers and everyone, for all of them, all the other entities that the company deals with, if they have a single entity, I think it becomes much easier. I think that was probably the way, and a lot of these common administrative works will go with. So that is something that probably should be at the back of their mind. They have Sanghi, which is also a listed entity, as well as ACC. So having three listed cement entities for one business doesn't make sense, and that's why they would go for this merger. Having said that, there are certain cost elements that one needs to look at. Those are the stamp duty when you transfer the mines, when you consolidate the entities.
Okay, all right. So in operational performance, it will be a smaller, smaller saving is what we could look at. Yes. Got it. Mangesh, the other burning question is whether or not a price hike can finally be absorbed. All through the week, various brokerages are saying that it's been hiked by 10, 15, 20 rupees. I also asked Ambuja Cement CFO. He said these are par for the course. Nothing big is going to happen till the monsoon, gets over. But what's your feedback? I understand that 10 to 20 rupees was what they tried to push through. How much of it has been absorbed according to you?
Yeah, so early days in terms of assuming, in terms of how much it has been absorbed till now. So South and East are the two key regions where, I believe that price hike is needed. Because the kind of prices prevailing right now, it is very difficult to generate a relatively higher EBITDA per ton for there. So this would be like, I would call it as a recovery instead of a price hike. So even if there is a 10 to 15 rupees price hike, I don't see that your profitability is going to be higher than what they delivered in the first quarter. So I think this is something which is necessary, which the industry is trying to get it through. If it sustains for 6, 7 more days, I think that is something that is need to be watched out for. But in my opinion, it has not gone through in South.
Got it. Very quickly, your top buy and sell calls from the cement pack.
Yeah, so we have a buy on Ambuja and Birla Corp. And third one I would like to add is Nivoco Vistas. So the rest we have a neutral or sell rating. And in terms of specific stocks, I think I would say Heidelberg, Ramco, and Star based on either valuations or balance sheet issues. We have a sell or a neutral.
Okay, all right. Got that helpful conversation. Thanks very much, Mangesh, for putting things in perspective.